Hi, I'm here to take you through State Bank of India Q4 result expectations. The results are expected tomorrow itself. In fact, if you look at the 18-hour poll, it suggests that the profits are likely to be fairly healthy at 6,400 crore, which is a growth of close to around 80% YOY. Lower base, seasonality in fees as well as control operating expenses should be aiding the overall profitability. Expect stable margins, which is seen at close to around 3.1% and stable margins should be supporting a healthy net interest income growth, even as the loan growth is still seen slightly muted at 5 to 7% YOY. Growth should be picking up slightly on a sequential basis, and also on the P&L front, expect some amount of recovery from return of accounts to aid the overall profitability. In fact, entire focus would be on the impact of the COVID second wave on SBI's delinquencies as well as growth outlook. So far, credit cost is likely to remain fairly elevated as the management may focus on strengthening the balance sheet, and hence the slippages are likely to remain slightly elevated, especially from the retail as well as the SME book. Kotak estimates that the slippage ratio is seen somewhere around 2% of this time. In fact, the slippage ratio did stand at 1.3% in the last quarter. If you look at the overall loan growth, it is seen picking up on a sequential basis, and deposit growth is seen at nearly around 11 to 12% YOY. Commentary from management: would they be going slower on growth, and also in which segments are they seeing stress, would be important, along with any further need of capital and any capital raising plans. If you look at State Bank of India, the proforma GNPA stood at 5.4% for the last quarter, and considering the trend that we have seen from most of the large private banks so far, the GNPA ratio has been either lower or stable versus the proforma GNPA ratio of the last quarter, and hence will SBI be able to report such a similar trend? That would be important. If you look at the stock, it is trading at close to around 1.1x FY23 price to book, and of course it trades at a premium versus the other PSU banks like Bank of Baroda and PNB, but of course it is trading at a fair amount of discount to the large private banks itself. So is there a case for valuation re-rating? That would be important, but again that would be depending on the macro outlook. The stock is up close to around 9% so far in the month of May. It is up 40% on the YTD basis, and it is the second best gated on Nifty Bank on a YTD basis. And also, most of the brokerages do have a buy call or an outperform rating on State Bank of India, with target price ranging anywhere from 450 rupees per share to 600 rupees per share. So yes, watch out for the results from SBI.